What's up, everybody? Today I'm taking a quick look at Broadcom stock. This is one of the largest companies in the world, surprisingly, which I didn't really know about it before. Ticker AVGO. Not quite sure what that has to do with the name of Broadcom, but we'll just go with it. Over the past 5 years, it's up 360%, so very good performance, and all-time performance is actually super good as well. So right now they've got a 50 price to earnings ratio, which is very high. Let's see if they have some growth to back it up. They are a $600 billion company at the moment. Let's check their financials here and their statements. Take a look at their revenue and zoom. Here's the revenue, zooming in. 17 billion. Okay, right here. 17 billion all the way up to 35 billion. They had 18% growth, and then it slowed down 8%, 5%, and then it sped up right after we got that big injection of money from COVID, and plus 15, plus 20, and then plus 8% last year. And analysts are expecting like plus 10 or 12% in the next year as well. And their first quarter of 2024, they did plus 34% year over year. So really good first quarter as well. That could probably explain why they're up so much lately. In terms of net income, so we've got 17 billion here, and the net income looks like operating income 2 billion to 5 billion, and then to 16. Right here, it was really low actually. 4 billion out of 23 is only like a 15% margin. Well, here we can go to stats actually. Let's go to stats. And on an annual basis, check their operating margin. Operating margin of 15%, 25, 19, then up to 31, and then 40 and 45, and then 23. So the thing with their margin is it's kind of all over the place. It's really interesting to see that because I would have expected this company to have more of a steady margin. But yeah, it's definitely not steady at all. And their net margin is also up and down, like 58% net margin. Makes no sense when their operating margin was 25%. And then, yeah, net margin is usually going to be a little bit lower than operating margin. Anyways, let's move on. Let's go to their balance sheet. Here's their balance sheet, their net debt. And their net debt, they actually put on a lot of debt in the first quarter of 2024. They added up to 64 billion. So I'm guessing they must have done a merger or an acquisition of some business because their assets and liabilities both went up by a lot, and their net debt increased to 64 billion as well. And their book value increased all the way up to $151 a share. Still a far cry from their current share price at 1300. Let's check their financing activities. They bought back 8 billion of stock in the first quarter of 2024. For all of 2023, they bought back 7.5 billion in stock, and then they bought back 8 billion in the first quarter of this year. Then we have dividends paid, and they paid about the same amount in dividends as they bought back in stock. So definitely returning value to shareholders. Let's check out their 10K, something that we might be able to get a little bit more information on the business. Here, I picked out this slide because it gives us a breakdown of where they're making their money. And they make most of their money through products, and most of it comes from the Asia Pacific region, which is interesting. This is much more of I guess they must make money through China, or maybe it's through like Japan or South Korea, because those are the biggest economies. Maybe India even. They're building infrastructure for internet, I'm guessing. And then they make a lot less through services, but their services revenue comes through the Americas at 5.6 billion. But yeah, the bulk of their revenue comes from the Asia Pacific region. The analyst estimates, this is what I like to use, 46 for this year and then jumping up to 57 in the next year. Another thing to note, there's 28 analysts and the low estimate is 35 and the high estimate is 50. So actually quite a large difference between those two. And then same with the following year. There's quite a large spread. Not a lot of a consensus on where these earnings could go. And then revenue. Revenue actually is much tighter range. Revenue at 50 billion. And it's a tight range between 49 and 51. And then up to 57 with 50 between 52 and 61. I plugged some of these numbers into a DCF model, so let's take a look. Remember, their price to earnings ratio was at 50, so it might be difficult to justify their valuation. They really have to grow a lot. So I put in growth of 15% for their earnings, going from 2024 into 2025, and then kind of 15% again, and then declining from there. I think it's more realistic to maybe grow for a little bit and then slower growth, the bigger that you get. Makes sense to me. So that's what I put in for their earnings, and using that, then we could say that their fair share price is about 11.91, and with them trading at 13.53, then their fair share price is lower than their current trading price. So maybe not a deal, but if you adjusted these numbers a little bit, then maybe it would be. Same with the revenue and margins. So their average profit margin, I'm putting out 25. I know that last year they did much better with their margins. I could actually show you that in the overview. Yeah, look at these margins. So in 2019 it was 12%, and then 2020 also 12%, and then they just go ballistic. And last year their net margin was at almost 40%, which seems kind of insane to me. And then the first quarter of 2024, their net margin dropped down to 11%. That was after their acquisition, so maybe that's the reason why their net margin fell off a. But yeah, also just looking at their statistics, their net margin is really just all over the place. It was 10% back here, 12, 12, and then they had this random one with 60%, and then they got up to 40% somehow. I'm not quite sure how, because they don't really break down their revenue in terms of like what products are selling the most or what services are they selling the most, and what those margins are. So it's really hard to get a good estimate on that stuff. So I just put in a 25% profit margin. I feel like that is fair for this business. If they can continue to have a like 40% profit margin, then I'm sure they're probably worth 13.50 at if that profit margin was accurate. For growth, I put in 13% and then 10% moving forward. I feel like that is very generous for this business. Being that they're already such a large business and they sell like internet stuff basically, and it's mostly in Asia. Americas doesn't really have that much growth. Asia, I guess it does have some growth, but I don't know how long it can continue. So yeah, I think that this is generous for them. And with that being said, their fair share price is at like $710 a share. So I would not touch this business at this price. Unless they could continue to do 40% margin, which seems like they can't based on their first quarter of 2024. I would doubt that they could do 40% margins all the way. But even if they could do 40% margins, it's still not worth their current share price. Yeah, definitely going to stay away from this one. They made a massive run, And now I think they are due for a correction. So if you guys have any questions, make sure to leave them in the comments for me, and I'll try to answer them. You can access this this spreadsheet for free. Just check the link in the description. And yeah, that's it for me. I'll see you in the next one.